Brad Williams, Frugal Finance. I'm going to go over this subject real quick, and that is, why did my mortgage payment go up or change? I have other videos on how these adjustable rate mortgages will affect your payment structure. Typically on a fixed rate mortgage, you're not going to have to deal with this. I'm talking about mortgage, not your escrow account. But collectively, you put the two together, and in this era, you're going to see the mortgage company that forces you to have an escrow account. In other words, your escrow account is your property taxes. So your property taxes most likely are going to change. But if you collectively have a adjustable rate mortgage and combined with your escrow account, you're going to see changes. Let me explain this briefly. Several things can cause your mortgage payments to change. You're going to need to check your mortgage statement on a semi-annual or annual basis based on whether or not you have an adjustable rate mortgage. But keep in mind, depending on what state you're in, your property taxes could go up significantly. California, we're protected by the Jarvis-Gann Act back in the 70s. So there is a pre-described max cap on an annual basis that property taxes can increase. I don't know about the other 49 states, but I know New York, it can be a stranglehold on property taxes. That being said, you anticipate annually an adjustment to your property insurance. Property taxes. Also, I'm sorry, I didn't include insurance. Homeowners insurance, if it's collectively combined, and if you have an 80% loan to value or less, you generally are not stuck with the requirement of an escrow account. That's voluntary. That means you manage your own money. On the other hand, on loans at 81% or more, typically the lender's going to enforce a escrow account where your property insurance and homeowners taxes will be combined. So you're going to have annually, on a monthly basis, you'll take 1/12 of those estimated costs. Now, your adjustable rate mortgage, number one here, could impact your monthly payments up or down, as I've explained, depending on what margin you have. An index, it can change. You have an interest only or pay option loan, and you start paying principal. You could have, depending on if you have a conforming or non-conforming loan, typically interest only loans are non-conforming. Now, that's subject to change. But if you have an interest only deal, let's say it's set for 5 years, and then here we are at the 61st month, all of a sudden, you're going to see this huge spike in a possible principal payment. Collectively, review your documentation. It'd be surprised. As I've mentioned time and time again, I used to own a mortgage company, and I would talk to clients and I'd say, how often do you review your note and deed of trust? They just laugh. They go, what are you talking about, Williams? Yeah, it's not something that people do. They just take it for granted. They sign it. They have other concerns. Well, just FYI, you should check this documentation, especially if you have an adjustable rate mortgage, because you forget what it's tied to. And because there's always radical changes in the area of finance, you might have a clause in there that says, well, in the event that we switch from LIBOR over to SOFR, make sure you understand what that means. I've explained it in the past, but you just need to know why your rates are going higher or lower. Not your rates, your payments. Escrow payments, that means property taxes and homeowners insurance and possibly other fees or other requirements or other payments. As I'd mentioned, your mortgage company could collectively force you to abide by this. Good or bad, I say next nay. I don't want anybody controlling and telling me what to do. Therefore, I try to avoid all of this stuff. But if you have an escrow account, check it. All right. You are relying on somebody else to calculate your responsibilities. Not for a second would I rely on a third party. Due diligence. That's what this is all about. Make sure your property taxes are what the city or county states. Make sure your insurance payments are correct. And shop. Clearly not for your property taxes. You have absolutely no control over that. But homeowners insurance, I mentioned time and time again how difficult it is in some areas. For example, here it is, 12/18/2024. I'm going to open up this link here, and I'm going to go to NYT.com, New York Times. And here, we're just going to look right here. Insurers are deserting homeowners as climate shock worsens. I've experienced this personally. I'm in Sacramento, California. My goodness, there's no risk in Sacramento. Okay, I'm about 300 feet from the American River, but that is a well-managed water distribution system here in California. Well, look right up here. You see this right here? I have family members that live in this territory. And guess what? They lost their insurance. If you go up to the foothills in California, you can buy property for practically nothing. Why? You can't get insurance. Or you could use the state of California's last resort policy, but it is radically expensive. Florida, look at this. Look at this. The East Coast. You could see the insurance companies. I don't have a kind word about any insurance company out there. Mainly because of what they've done to me, what they forced me to do. And I have videos on what I had to do in order to satisfy these. They want white glove. They want zero liability. And that's the absolute contradiction of what an insurance company is all about. But it is what it is. So just be careful and cognizant of where you live. And you can see these risks. You can see highlighted here what happens. And you can see the red areas, how challenging it can be. And you can see up north here, and this is a high fire zone. And you can see how these insurance companies are deserting the arena. Their choice, your responsibility. Sadly, that's just the way it is. You have a decrease in your interest rate or your escrow payments. Keep in mind, fixed rate loan, you're not going to have to deal with this. Escrow payments, yeah, not likely you're going to see anything lower in terms of escrow payments because property insurances, for the most part, are going to increase. And even in declining real estate areas, you're going to struggle with the assessor's office. I've challenged them in the past. And then it's just wait. This never-ending wait game, and then it's just this and ah, and it's a horrible process. You can challenge, but most likely your time is more valuable than the entire process. And again, it's this typical bureaucratic layers and layers of crap at any government agency. So your choice. You can always challenge if you think the appraised value is pathetically high in a declining market, then challenge them. You're assessed more fees. Don't be surprised. We're in an environment where the consumer is the least concern of Wall Street. It's also possible that mortgage servicers simply make a mistake, and this is common. What happens if you're just not aware of what happens? Let's say you buy your house and you go through a mortgage broker. The mortgage broker packages that thing up and funds the deal. In other words, it goes through, let's say, Countrywide. Well, it can't be Countrywide any longer. It's some other company. But let's say it's just this big conglomerate. Well, that conglomerate doesn't want to hold on to your loan. So they sell it to Wall Street. Then Wall Street packages that whole thing up and sells it to a money manager, the interest. In other words, what you're paying, a big portion of that is going to go to whoever bought that loan. But that money manager doesn't want to babysit all of these loans. So they have a servicer. And servicers are notorious. They're as bad as credit reporting companies. These mortgage services make mistakes all the time. It's up to you in order to correct this information. And again, it's not something that you pay attention to. You might even be on auto pay. I would never, ever, ever rely on auto pay for anything. One, there's that hacking thing. Your information is no longer private. I suspect the hackers have every social security number in the United States of every living individual and a lot of non-living individuals because there's just so many, it's so porous that there's just no way to protect yourself. But to alleviate that, you might want to reconsider whether you're doing this auto pay. However, being the way it is that these mortgage companies gave you that incentive. Look, we'll lower your interest rate by 1/8 of a percent if you do this auto pay. Now you're stuck between a rock and a hard place. Yep, it's just a matter of periodically going back and do your accounting. No, it sucks. Frugal finance. This is all about crossing the T's, dotting the I's. Turn off the damn television for a few hours and babysit this stuff. Yeah, I know. You have to be responsible, and mistakes happen all the time. And because you're possibly on auto pay, you're not looking over this stuff as often as you should. I'm guilty, not on the mortgage side, but looking at my bank statements and so on and so forth. I'm guilty. I'm as guilty as everyone else. I need to look after my own house instead of training or educating people about this stuff. Yeah, I know. Towards the end of the year here, I know I have to. Next week, I need to reconcile all my information, but doing it annually is not enough. So with that being said, comment on perhaps your opinion about having escrow payments. The biggest thing here is, how do you get rid of these forced escrow accounts? Well, typically, if your loan to value is greater than 80% in some states, or perhaps your loan agreement says you just write them and saying, adios, I don't need you to control what I do. In some instances, you might be stuck with that from cradle to grave, and that is pathetic. But again, maybe it's helpful. Maybe it forces you to, instead of twice a year, depending on what state you're in, California, we have to pay property taxes twice a year. Homeowners insurance, I deal with it on a monthly basis just because I can control my homeowners insurance and when I make the premium payments. But you might have to pay whenever you make your mortgage payment. You also include that all together. Maybe you like that. Maybe you did it voluntarily. Maybe you think they're handcuffing you. Let me know. Let me know about your homeowner's insurance. Are you facing more criteria? Are you getting those nasty letters from your homeowner's insurance company with demand? I've faced it, and I really, really, really despise my homeowner insurance company. All right. Like every other insurance company, they have you between a rock and a hard place, and they know it. So give me your opinion. Do you think it's fair? Do you think it's unjust? Let me know about your adjustable rate mortgage. Do you understand it? Are you shocked when interest rates increased over the last year and a half? Are you in a bind? Do you now have to refinance because you think interest rates are going to go up and a fixed rate mortgage is the rate to go? These are the things you have to think about after the fact. Wow, it looked good 2 years ago when interest rates were near zero, but now interest rates have skyrocketed. What do you think? Share your experiences. Brad Williams, Frugal Finance. Thanks for watching. See you soon.